Hey everyone, welcome to Altius Investech YouTube channel. We deal in pre-IPO and private equity. We hope that you're all doing very well in this pandemic and staying home. Today in this video, we'll be talking about income tax on unlisted shares in India. Now even after this video, if you have any doubts or questions, make sure to visit our website or call on the number given here. So let's move on, shall we? Let's start with capital gain on sale of unlisted shares. What are unlisted stocks? Unlisted stock is something that is not listed on any recognized stock exchange. Thus, the company doesn't have to pay securities transaction taxes on such shares. The period of holding for such shares is 24 months. Now, there are two types of capital gains. One long-term and one short-term. Now you ask what they are. Long-term capital gain is when an investor sells an unlisted stock held for more than 24 months. The gains or losses from such sales is long-term capital gain or long-term capital loss. Short-term capital gain is if an investor sells an unlisted stock held up for 24 months. Gain or loss on any such sale is known as short-term capital gain or short-term capital loss. I hope that's clear. Moving on, we talk about income tax on unlisted shares. Income tax on trading in unlisted shares is similar to the tax treatment of other capital assets that you have. For example, your own house. The following are the income tax rates on sale of unlisted shares of a domestic company or even a foreign company. Long-term capital gain is 20%, while short-term capital gain is taxed as per given slab rates. Another note, in the case of a non-resident, long-term capital gain on unlisted stock is 10% without indexation. Let's talk about tax on IPO shares. If the shareholder sells unlisted equity shares of a company that issues an IPO to offer shares to the public. Now, what is an IPO? It's known as Initial Public Offering. Such shares are later listed on a recognized stock exchange, and STT is also paid for the same. The tax treatment on sales of such shares would be the same as the case on listed shares as follows. Long-term capital gain taxed at 10%, which is basically when it's excess of 1 lakh rupees. Short-term capital gain is taxed at 15%. Now let's talk about the ITR form, due dates and tax audits. ITR form. Trader should file ITR2, which is ITR for capital gains income, on an income tax website since income on the sale of unlisted stocks is capital gain. Now, due dates are available on various websites. Similarly, if you want information on the same, please make sure to visit our website or call us on the given number. Tax audit. Since the income on the sale of unlisted stock is capital gains income, the applicability of tax audit under Section 44AB need not be determined. We really hope this is clear, and if you want any help at all with your ITR forms or your tax audits, make sure to reach out to us. Next up, we have carry forward loss on the sale of unlisted shares. The investor can set off short-term capital loss against both short-term capital gain and long-term capital gain. They can carry forward the remaining loss for 8 years and set off against STCG and LTCG only. The investor can also set off long-term capital loss against long-term capital gain. They can carry forward the remaining loss for 8 years and set off against LTCG only. That was it that we had for unlisted shares today. If you want any further clarification, please reach out to these below. For further information and to learn further into different things into the world of finance, make sure to check out our LinkedIn and Instagram pages, which will be listed down in the description below. We hope this was easy and fun to understand. We'll see you in the next video. Thank you so much. Also, make sure to subscribe.